puts, May 16th, 585 puts. I'm long at 216. Let's see what happens. I'm a little late today. I'll explain why I'm late trading today in a minute. Looking to get back to low of day. Low of day is 585. I'm long 10 puts right now. All right, so you see we had this long upper wick here above the 9 EMA, but it closed below, and then we had another long one, but closed below. So I'm still in this trade. I'm still hanging in there. I was up 200 down here, but I wanted to go for a little bit more. We'll see what happens. All right, I had to get out of that trade. This is getting away from me now. So looks like I took a $200 loss. Yeah. Yeah, that was a $210 loss on that trade. All right. Wait for the next setup. I'll tell you one thing about the psychology and how trading messes with your head is you could back test your setup. And when you don't have money on the table, you don't have a trade going on, the back testing, oh, it works. It works freaking great. Works freaking great. And then as soon as you put money on it, you get the feeling that the whole investing public out there, right, on the internet, around the world, is now aware that you're long calls, so they want to kill the market, or you're long puts, and they want to send the security you're trading to the moon because they know you're in it. That's the feeling that you get. You feel like everyone out there knows what you're doing and they want to hurt you. that is one of the things. And trust me, if you haven't traded yet and you're going to start trading, and as soon as you put a trade on, so you back test something for weeks or months, and like, wow, I'm going to clean up on this. It works great. But then as soon as you put money on the table, it seems like, all right, he's in. And everyone in the world who's trading that security is conspiring against you, that they're out to get you. That is what day trading does to your freaking mind. It totally messes with you. It makes you feel like I have 10 lousy calls out there that I'm looking to make a couple of $100 on, and the whole world is out there to get me. All right, so now we have about to have two green candles close above the 9 EMA, so I'm going to go long 10 calls. We'll see what happens with this second candle. All right, we didn't get a second green candle. Thank God, because I don't want to go back in here yet. I don't like this price action today. You know, one thing I didn't do, well, first of all, let me tell you. So I had to meet my wife this morning before the market opened to go pick up some furniture that she wanted. She found some furniture online that she wanted. So I had to meet these guys there, the movers, and take care of all that. So I missed the opening today. And what did I miss? I missed these two green candles right here. And that was a good trade. Of course, right? And this is about 30 minutes into the market. So I would have taken this trade. Right? We're 30 minutes in. If you watch my videos, you know I like to wait for the first 30 minutes. So I had these two green candles right here. I would have went on long on calls right here, and I would have had a nice freaking trade. But no, I had to go out and mess around with furniture today for my wife. So then I came in here. I had these two red candles. I was up 200 down here. I had no reason to get out, and then I ended up losing 210. Right? So now I'm in, or waiting to get in rather, because I had this one green candle close above, and then we had a red candle here. So that's no trade. So I'm waiting to get in again. So that's why I was late trading today. And there's another mistake I made today. Before logging in, I didn't check the economic calendar. It's something you actually want to do. You want to make sure the market might be waiting for someone to speak, like Powell or something. I didn't even check it yet, which I really have to. So that's what I'm going to do now. Okay, so looking at the economic calendar, we had jobless claims at 8:30, retail sales, PPI, and now some Fed governor is going to speak at 2 o'clock. There's nothing else that occurred, so I think we're good for the rest of the day. Tomorrow we have housing starts, building permits, consumer sentiment. So I'm waiting for a second green candle here. I have my order ready to buy 10 puts, 10 calls. Uh, Tomorrow expiration, 587s. And it doesn't look like we're going to get that candle. Let me see. Maybe I want to go out to next week. I think maybe I'll go out to next week. So I don't want to trade tomorrow expiration. I'm going to go out to next Friday. Yep, we're just green, red, green, red. Not liking the price action here, but the market is looking kind of weak today. But you have all these different highs. You got this high here, you got that high here, then you got this high here, and then you got this high here. Um, you got this low, that low, this low. So I'm not liking the price action here today. Yeah, I'm really not liking the price action today. We're just trading in this range. This is the kind of crap where you just keep hitting your stop losses for a small loss, then a small loss, then a small loss, and it's not worth it. I don't like what's going on today, so I think I'm going to just hang it up for today. Um, I really don't like it. I really don't like it, but we'll see. I don't know. I don't know if I'm going to close down yet. All right, I'm back in long calls, long five calls at 5:43. Uh, we'll see what happens here. I'm long the May 23rd, 587 calls. And looks like we're getting a little push here. We will see. Shooting for high a day. High a day would be nice. Right now I'm down 223 for the day. I have a trailing stop ready. 10-cent trailing stop. I'll give you the mark if it hits. One of the things I don't have is enough monitors. I need two more large monitors so that I can look at news and um, when I'm trading the SPY, ETF, I'd like to look at the ES futures and NASDAQ futures at the same time. But for this exercise, there is not supposed to be any subjective calls. It's just two green candles above the 9 EMA. You go long, two red candles below the 9 EMA. You go short and buy puts. And then you stay in those positions until you hit your stop loss or your reward that you're looking for. Yeah, see, now we're getting stuck at the same spot that we got stuck at 1024 today. Not liking it, not liking it. Yeah, there is a real battle going on here at this price level. We're getting these quick little pushes up, and then someone's just hammering it right back down really fast. We'll see who's going to win this. The Bulls or the Bears. And so the whole point of this exercise, Mark Douglas's book, Trading in the Zone, this 20 trade exercise, is not to be subjective, not to let emotions guide your trading. So we're above the 9 EMA. This is the strategy that I've chosen to test these 20 trades out. He tells you to test whatever strategy you want, whatever edge you want, as long as you don't make any subjective moves, that it's all objective. And that's what I'm doing here. I'm just trying to let things go, keep my emotions out of this trading. All right, so I just marked out the high of day here on the SPY 587.11. I'm just waiting to see how much the buyers are going to take over. Now, one of the things about this strategy is, so here's the 9 EMA, this blue line. I had two greens, so I went long here. I bought my calls here. And we're having a nice little slowly grind upward. Now, the strategy I'm using, if it closes below the 9 EMA, I'm going to get out of this trade, right? But as you see, the 9 EMA is following up the price action. So my close under the 9 EMA might be up here, which will still be a little bit of a profit depending on where on this candle I got in. But that only works out if you have a nice little run up. And the 9 EMA just follows that price action up. All right, we're getting a nice push towards high of day. I want to see what happens at this high of day. If we can break through it, that'd be great. All right, we're pushing through that. So I am going to put my trailing stop in. Looks like mark 90. And we are going to follow this up. We're breaking through the high of day. Okay. We got executed there. All right, that looks like a good trade. We were in 5 calls at $5.43, and our trailing stop went off at $5.91. About a 230 something profit. So we're about flat for the day now. This is another good strategy that some guys use. They look at the high of day and they look for a break and a retest of the high of day. And if it holds, they go long. And maybe look for the previous day high, which would be up here. Right? Some guys do the overnight high, a break and retest during the regular session of the overnight high. But this case, it looks like we've got a break and retest of the intraday high. Yeah, this is turning into a nice trade. This is one of the things I really have to work on, is staying in the trade. But the question is, how much do you want to make? I didn't want to get to the point where, I want to get back what I lost on the first trade. Even though that happened, I got back, and I'm about 10 points up for the day, $10 up for the day. But really, I'm using this exercise to get rid of my emotions and take the profit that I'm looking to get out of it, which is between $200 and $300. I think when I'm done with these 20 trades, I'll sum up how I did. I know I made a lot of mistakes during this 20 trade experiment, and I learned a lot. And that's the whole point: is learning, getting screen time, and learning from your mistakes. A lot of emotional mistakes I made, which was the whole point of Mark Douglas's book, was to prevent you from making emotional mistakes. But I did them anyway. So I have more work to do, right? And I hope you're all getting a lot out of this experiment of me using my money to experiment so that you don't have to. You can watch and learn from my errors and see that this 9 EMA strategy, when it works, it's nice. And you just have to make sure that you take your small losses when you're supposed to, right? All right. Yeah, it's a really nice trade. So I think one of the things I'm going to do on the next 20 trades, I'm going to do this experiment again, is I'm going to stay in the trade for as long as we're above the 9 EMA when I'm long calls, and stay in the trade when I'm in puts as long as we're below the 9 EMA. And at least up my profit expectation to 300 to 400 instead of 200 to 300. And of course, on the stop loss side, if I'm long calls and candle closes below the 9 EMA, then of course I get out. And if I'm long puts and a candle closes above the 9 EMA, then I get out as well. Keep my losses small. There's one thing about using a trailing stop, is right about here. I forget which candle it was. Let me see what time that trade was. 11:05. I got stopped out at 11:05. So that was on this candle here. So it dipped down and hit my mark. And I lost the rest of this run. That's the problem with using trailing stops. But, what if this candle, something happened in the market and this went right down to here in 10 seconds, 20 seconds? That can happen. Once you reach your profit, your reward part of the risk versus reward part of your trade, it makes sense to use a trailing stop. Sometimes it's just going to keep going, and you could ride some more out. Another thing you can do is I had 5 calls. I could have maybe gotten out of 3 of them and let 2 run. And I could have done that. I have to think about that too. I know there's a guy I watch who once he gets a 20% or 12 to 15, 20% profit, he closes a third of his trade. And then if he gets another 20% or whatever, he closes another third of his trade. And then he lets a third of his trade run. And a lot of times that last third, he'll put in a stop order, a hard stop order. There's a lot of fluctuation you can do, but you have to have this all figured out ahead of time. You can't just do this on the fly. You have to write down what you're going to do, and that's it. And you stick to it. Okay, so the upside has run out of steam. So let's see what happens. 2 red candles below the 9 EMA. I'm going to be buying puts. And I'll see if I could squeeze more than $10 out of the trading day today. The bulls are defending here. And a lot of you people watching this, watching me screw up these trades, you're probably saying to yourself, well, damn, I could do a lot better than that guy. Okay, but if you haven't traded before, please learn a lot before you're putting real money to work. Please read Mark Douglas's book. And I'm not a shill for Mark Douglas. I don't know who he is. He doesn't know me. I don't get any money for recommending his book. Don't even buy it. I don't care. Go to the library and get it. But read it, study it, and learn, and just practice. Practice, practice, practice. Don't be trigger happy with that mouse and start putting real money to work. You know? I'm really looking for a red candle, 2 red candles under this 9 EMA. I think we're going to have some trap buyers up here. See, his last long push of could be retail traders chasing this long. I get 2 red candles under the 9 EMA. I'm going to be buying puts. Wow. Boy, what a nice curl higher, huh? I got in here and I got out here, I think. Oh boy. It's running away now. Damn. Damn, damn, damn. This is why Mark Douglas wrote the book on emotions. My strategy said stay in until I get a red candle below the 9 EMA. I got in over here. I could still be in this trade. I'd be up over $800 right now. Oh, God. Okay, so once again, I was pulled away by my wife to go pick up some furniture. So I missed this trade. 2 green candles. I was supposed to go long here, but I wasn't on my computer. So now I had 2 red candles below the 9 EMA. I just went short. I bought 5 puts. We'll see what happens. I'm in the 590 puts for 590 puts at 502. All right, I got out of that trade for about $74 loss. I got in here, 2 red candles below the 9 EMA. This is where I got in. I had a green candle close above the 9 EMA, so I closed it. I got out. Okay, we'll see if we get another red candle to close below the 9 EMA, and I'll buy some puts again. Another lesson learned. I missed out on this run because I let the wife take me away from the computer to go look at furniture. Don't let that happen to you. Okay, I'm back in again. 589 puts. 589 puts. At 458. And we'll see what happens. So far for the day, I've taken 3 trades. I'm down $63. Keeping losses small. Okay, I got out of that trade too for a small loss. I think that's going to be it for today. I'll sum everything up. I had a green candle close above the 9 EMA, so I'm getting out, right? That's the way it goes. I don't know. Should I give this one more try? See if I go short again, buy some puts, see what happens. Maybe one more try. All right, went in again, 5 puts, $4.74. Let's see what happens. Did you see that? I have no idea what the hell just happened there. This has got to be a screwed up candle by TOS. I have no idea what the hell that was. But if it was real, it recovered so fast I couldn't get out of the trade. I would have loved to. That would have been a nice profit. But now, because of this candle, we're above the 9 EMA, but I'm still profitable right now by a tiny bit. So I don't know what to do at this point. If this closes green above the 9 EMA, what do I do? Do I close this trade out? Probably. Probably. All right, we closed red above the 9 EMA, so I'm not closing this trade out. I'm still in the green here. I'm hoping we can revisit the bottom of this weird candle that just appeared out of nowhere. Now, I know we had a green candle close above the 9 EMA, but this candle screwed up the 9 EMA so bad. And the market is looking weak to me. So I'm gonna stay in this trade. I'm still in the green on this trade, so I'm gonna hang into it. I want to see if we can get back below the 9 EMA and fall further. All right. I got out of this trade for a little profit. I didn't like the price action here. I had a green candle above the 9 EMA. I don't know what this candle was, if someone really dumped a whole bunch of SPY ETF shares, or if this was just a glitch on TOS. I have no idea. And of course, as soon as I get out, here he goes. This is what I'm telling you about trading is if sometimes it feels like everyone out there is just waiting for you to place a trade so they can crush you. It's a big giant conspiracy out there to get you. But let me wrap this up, and I'll total up today's losings. Okay, let's go over my trades here. This first trade here, I bought 10 puts for 216, sold them for 195. That was a $223.25 loss. Next trade, bought 5 calls at 543, sold them at 591 for a $233.39 profit. Next trade was I bought 5 puts at 502, sold them at 488. That was a $73.61 loss. The next trade, I bought 5 more puts at 458, sold them at 454 for a $26.61 loss. And then the last trade I just took, I bought 5 puts again for 475, sold them at 487 for a $53.39 win. So total for today was a loss of $36.69. And I finished my 20 trade experiment, Mark Douglas's Trading in the Zone 20 trade experiment, and I made a boatload of mistakes this week and ended up with a loss of $168.75. I did everything you could possibly think of that was wrong this week. And the previous week as well. I didn't control the emotions, which was the whole point of Mark Douglas's book. I didn't stay in a trade when I was supposed to. I let someone take me away from the computer for a reason that wasn't an emergency, and I ended up missing this trade. Earlier in this 20 trade experiment, I shut down early. Yeah, I just made a lot of mistakes. So I'm going to do this again. And of course, here we go again. Now I had 5 puts in here. And we had this candle close, or this one close above, or this one here is where I got out. And now, of course, the market's going where I want it to go. Which is typical. It makes you feel like there's a conspiracy just against you. Your 5 lousy puts that you're long. Everyone out there who is trading the SPY, which is probably right now millions of people, they're all conspiring against me. Let me know in the comments if you feel that way when you're trading. But I hope you learned a lot from this these 2 weeks of me trading, taking these 20 trades using the 9 EMA strategy, making a ton of mistakes where really I should have ended up in the green about $2,000 on these 20 trades. I just totally made so many mistakes. I'm going to do this strategy again. I'm going to be more disciplined. I'm going to eliminate emotion from my trading. I'm going to let these trades run. I'm going to stick to a more rigid strategy, and see what happens. So I'm going to do this again starting tomorrow. Tomorrow's Friday. We'll give it another go. All right. If you got anything out of this, if you're new, subscribe to the channel. Please give it a like and share it, and leave any comments or questions in the comment field. And I'll be back at it tomorrow.